Okay, class. Thank you for that. Now, we are looking at 3.1. And we're videoing this. It's going to go on YouTube, but it's going to be connected to the online class, so you've got this for yourself. Anyone who doesn't want to be here needs to leave now. So, 3.1 says, assess the source and structure of the trial balance. So, the first thing we need to do is to identify the key word or words. What's the key word here, please?
Assess.
Good. The key word here is assess. And what does assess mean?
Is it a gauge?
Yeah, it could be to evaluate. The dictionary does say it's to evaluate, to analyse, to form an opinion, to kind of determine what's happening. Okay, so it's important to understand the key word before we can move on. So that's good. And then it says the source and structure of the trial balance. So can we go straight into the trial balance and do the trial balance? No. Why?
Because it says firstly to assess, recruit, establish, and then to the source.
The source. So the source of the different items in the trial balance will be the source where the different items come from. And in order to try and know in the trial balance if something is a debit or a credit, you really have to know before that which ledgers the different items come from. But knowing that, we also need to know briefly about books of prime entry, and we also need to know about the different ledgers. So we know that obviously, firstly, what is a trial balance? What do you think a trial balance is?
It's what helps you to test out
Yes.
the budget.
The figures match up.
Yes, if the figures match up before you do your financial accounts, the profit and loss account and the balance sheet, before all the different accounts are totaled and done when they're T accounts and summed up, before it actually goes into these accounts, a trial balance is done to match and find out if your figures actually debit and credit and balance in the trial balance. So if you're actually online and in line with your facts and your figures and your transactions of your business before you go straight into doing the accounts. Okay? So it's to gauge whether you're on the right track or not. And a trial balance has, what's the structure? What's the structure of a trial balance? We are going to go back into the source. But what's the structure of a trial balance?
It comes in 4 categories.
Okay, explain. So what section do you have in there? You've got 3 main sections. What are the sections?
Your name?
Okay, you've got the name of the different items, yes?
Yeah.
And some of those items can be what? Just give me some examples of the items. Capital, bank loans, stocks, trade receivables, trade payables, wages. So these are all some of the standard stuff that you're going to see in the majority of businesses. So you'd have the name of the actual item on the left-hand side. Then what will you have next to the name? You'd have the debit. Good. The debit. And then what would you have on the right-hand side? The credit. And when you total all the debits and all the credits, what should they do?
Balance.
They should balance. So the total debits should equal the total credits. Okay? And if it's not, then you haven't done something quite right. Yes? And it's not always easy, because you can be there or thereabouts, and there could be just something missing or something not put in the right place. And many people get it wrong. I kid you not, and there's something missing or whatever else. It's not easy to balance the books. Okay? Okay, so we know what a trial balance is. We know the structure of a trial balance, because the structure would be the name of the items, the different items. You would have a debit and a credit, and you know that the total debits will equal the total credits. But the thing is, what we need to know is the different items like capital, stocks, sales, cash and equivalent, bank loans, furniture, trade receivables, trade payable, and wages. We actually need to know the source. Where do they come from? Okay, so we need to know about various ledgers. Yeah? So what ledgers are there in accounting? Where can these come from? What ledgers are there?
4 ledgers, isn't it?
Okay, the 4 ledgers, what are they?
Um,
You have the sales ledger, good.
purchase,
The purchase ledger, yes. Cash book, good.
general.
And general or nominal ledger. Now, the sales ledger is called the sales ledger, or what else is it called?
Account payable.
Accounts receivable.
Receivable.
So the sales ledger is called the sales ledger or accounts receivable. The purchase ledger is called the purchase ledger or accounts payable. Good. And the cash book is the cash book, or petty cash,
Okay. Yeah.
or petty cash. Yes.
Yeah.
Or some people say, well, what's petty cash? You might just liken it to a float of the day, the amount of money that's available in the business on a day. And a nominal ledger, what can that be called?
That's a general ledger.
General ledger or accounting ledger. Yeah. So the nominal ledger can be referred to as a general ledger or accounting ledger. So it is important to understand that the sales ledger can also be called the accounts receivable. The purchase ledger can also be called the accounts payable. The cash book can also be petty cash. The nominal ledger can also be called the general ledger or the accounting ledger. Because it can be confusing, can't it? Not knowing what name. Because if I was talking about the sales ledger and then all of a sudden I switch to accounts receivable, that's going to confuse you, isn't it? So it is important to link up the sales ledger, and I know I'm repeating myself, but I'm going to say it again. Because as teachers, we tell them what you're going to tell them, and then we just tell you what we just told you. So, so that's what I'm doing. So the sales ledger equals the accounts receivable, purchase ledger equals the accounts payable, cash book is the petty cash, nominal ledger is the general ledger. But what is the general ledger or the sales ledger? Accounts receivable or the sales ledger. What is it? Tell me. Someone want to explain it to me.
What's the question?
What is the sales ledger?
All ledgers come to this.
So, but what is the sales ledger? What is the sales ledger? Because we need
Sales
because
ledger is accounts receivable, so
Yeah.
that is invoices,
good.
credits,
Yes.
that's owed to you,
To the company.
to
Yes.
the company, because it's
Good.
receivable.
Good. And so that's money that is owed to you.
Yeah.
Yes. So
Owed money.
if you think about it, even if you haven't got it, if someone owes you something, is that an asset or a liability?
That's it.
It's an asset to you because that is owed to you. It's not a liability because it's owed to you. You're not liable to pay it. Someone is liable to pay you, so it's owed to you. It's an asset. It's a current asset, okay? As long as it's paid in 1 year. So just to recap, and that was very good, by the way, the sales ledger are like, sales you've already made, you've already invoiced the customer, but they haven't paid you yet. And on the sales ledger, you'd have loads of your customers who you may have invoiced, and you'd have a complete record of all of those customers. What orders they took, because they could take multiple orders, and you might give them a credit limit. And they may have paid you some. So in addition to that, you might get credit notes coming in, and you might get part payments coming in. They may have ordered something, part paid, ordered something else, and then part paid. So under that customer's name, it totals up how many sales they've taken, for what products, and how much payment they've made already, and how much is outstanding. Okay? So that is actually a current asset, which we will move on to, which I'm sure we touched on, which will go into the balance sheet as well as a current asset. Would someone like to explain the purchase ledger to me, please?
Purchase ledger is the same as
Yep.
a sales ledger,
Yes.
but instead of receiving,
Good.
it's payable, so it's
Yes.
purchasing.
Can you give me an example?
What's owed to you?
What is what you're paying out?
Yeah, what you're paying. So what you're paying for.
Yes, what you're paying for. Give me some examples.
Maybe invoice.
Invoice. Let's talk about a restaurant. So what would you be paying out for? That you might have an account for.
For suppliers.
Supplies such as. It might be food. It might be fish. It might be whatever supplies that you want. You might have a trade account into a business, and you may not pay that straight away. You might have credit terms to pay 2 weeks later or even 4 weeks later. And again, this you would have a purchase ledger of all the things you bought, how much it cost, and how much you paid, if anything, what the credit terms are, and how much payments you've made or not. If you made some payments, then it would deduct it from that amount that you owe, and that would be the amount payable. Okay. So would that be an asset or liability to you?
It's a liability.
It's a liability because you owe that money,
Yeah.
and so you have to pay that out. So in the balance sheet, that would actually be a current liability payment, normally within a 1 year period. Okay, good. So we've talked about the sales ledger, the purchase ledger, but sometimes people get confused between the sales ledger and the cash book. So would anyone like to tell me what is the cash book, firstly?
I think the cash book is money that you make on that particular day.
Yes. Transactions made in cash on that day. Does it have to be cash? Can it be, what else? Credit card, online payments, payments and already taken.
Yeah.
Okay, so what's the difference between the sales ledger and the cash book?
This cash book is what's in and out, right?
Yes, good. Cash book on that day, so it's already paid for.
Yeah.
Whereas the sales ledger,
It's going to be.
it's what's owed at a later time, and you will bring that in at a later time. They haven't paid you yet. Yeah?
Yeah.
Good. It's important to get that.